What a bad day today. What a super bad day today. But hopefully in this video, and these videos are coming up, I get to show you how to turn a bad situation into a good situation. But first, I want to say shout out to Colombia, baby. Shout out to Colombia. Shout out to Colombia. Um, yeah, today we're down today, and I want to show you guys how to make a bad situation into a good situation. So, ladies and gentlemen, the market is closed. We did make some plays earlier today, just a few plays. I'm gonna go over some of the things that I did and see what we can do, strategize, game plan, go over all that good stuff, great stuff with you guys. If this is your first time watching this video, first time watching me ever, go ahead and pause this video, subscribe to the channel, like the video, drop a thumbs up, drop a comment. And the purpose of all of these videos, the purpose of you even watching this, is you haven't gotten started in investing and you're thinking about getting it started, but you don't know how to. Well, this video is for you. And this isn't financial advice. This is someone you can watch and see on a day-to-day basis and see what they do, and maybe it could spark some questions, maybe it can like remix your own style, whatever the case is. So, ladies and gentlemen, we do have a few plays for you today. First things first, Coca-Cola has been popping, ladies and gentlemen. Coca-Cola has been popping. We had a little pop, lock, and drop yesterday. And same thing a little bit today, a little pop, lock, and drop right here. Just pop, lock, and just drop it. But we just stayed at this level yesterday at a highest of 80. Came back up to 78. I have these covered calls. Got one that's expired in 2 days at the 77. So let's see what Coca-Cola will bring at the 77. And then we also have SoFi here. Another play. This play here is getting me crushed. I'm getting crushed. This is where I want to show you guys how I can make something into a bad play into a good play. So, ladies and gentlemen, SoFi down 15% today. Holy smackers. So down 15%, and as you guys can see, I am down 18%. I'm down $722. But we're going to use a couple cover call strategies, a couple credit spreads. We're gonna do as much as we can here to lower this this debt that we have. So, ladies and gentlemen, we're definitely going to be winning these covered calls this Friday. The question is more about how do I position myself for the next covered calls. And how do we do that, ladies and gentlemen? You have to average in. I'm sorry, you're going to have to average in. It's going to suck, but that's something you're going to have to do if you want to like exit out cleanly or without losing too much or what you were supposed to lose. Like right here. Hopefully I could buy 10 shares. Buy 10 shares here. 10 shares. Average cost right now is 19. Look at that. It dropped at 16 cents. So it's not that much. It's not that much. But if I go ahead and buy another like 80 shares or so, it's going to drop this down maybe a whole dollar. So while this drops it to like a whole dollar, I could now do covered calls on 300 shares, right? And then build those premiums on those 300 shares. That way, like, I can escape all these positions without like losing so much. So that's that. I don't even think we could buy fractional shares right now because the market is closed. I think they're gonna queue my order. Oh, I got it. Okay, I thought they would queue my order. All right, well, let's go ahead and buy our fractional shares here, ladies and gentlemen. If you don't know, now you know. This is how to invest realistically in the stock market. And when I say invest, I'm not saying trading. I'm not saying being an activist, like in day trade. I'm not saying none of these things, right? I'm saying that Oh, I can't buy lows. I gotta put it in the queue. All right, put it in the queue. What I'm saying is that if you want to invest, you want to protect your money, you want to be a market participant for the long run, this is one of the unique ways you can go about investing your money. Just buy fractional shares. So you're gonna give me another Q order. So why did I get into SPY? Why did it allow me to get into SPY? Let's see something else. Caterpillar in the video. Would it let me get some Nvidia after hours or no? Okay, so I got some of the video. So a part of my strategy, guys, is buying on red days or when a stock is red. It's just an easy strategy. Why? Because if there's 252 trading days in a year, right? So let's just say 52 of those trading days were red days, but the 200 were green days. I mean, depending like how severe those red days were, hypothetically speaking, if I bought every single red day, I think I'd probably be up or I'd probably be at that break even point. SoFi we're down, getting crushed on. AT&T we're gonna add to that position later, and then this next one, we're probably gonna get rid of this PO. I'm gonna get rid of this. I don't even know how I got into it. I'll take my loss. I'll take my $65 and head the hell out of here. Cause I bought it for 8 and it already dropped that much. Yeah, I'm out later. Take my losses there, and then we're gonna add another 10 more shares here. Add another 10 more shares if I can. I think 10 shares is what, $600? Yeah, I can't even add the 10 shares. I'll add like 5. Add 5 shares here. Cool. So we got a couple plays. We did a couple of plays that we could have after hours. One play I really want to go over with you guys is this one right here. I have 20 covered call or 20 credit spreads on AT&T. What I'm hoping to happen is between now and May 15th, AT&T does take a little bit of a leg down. I'm kind of like sandwiching AT&T in a sense. If AT&T goes down, right, and my average cost of AT&T is 26.14, and AT&T doesn't go up, my strategy is make money on the way down, covered call, make money on the put, and then also make money on the credit spreads. So here, this is worth $860 of credit spreads. So if I were to get this correct, right, AT&T drops, I would be making $860. $860 is 8.6 points. 8.6. So 8.6 minus 26.14, it's about like 15, no, 17, 18. 17, 18 points, meaning that I would recuperate about like a third of my position just in credit spreads. So like, let me break this down in layman terms, right? This is worth just these, what? How many contracts? Just these 20 contracts is worth $860. Let's say I got another like 40, no, what, another 80 more contracts. If I got another 80 more contracts, the value would be worth about like $32,000 or $3,200. Let's say I won that $3,200. Basically, this credit spread would cover my 100 shares. I spent $2,600 on my 100 shares, but this play would actually give me that money right back. So technically my shares would be free. And not only why I like this play is only costing me an average of $7 per contract. So that's why I'm kind of going heavy on it, because I'm only going to lose $7 per contract. So hey, $7 per contract. But if it moves down in a vicious way, like let's see here, like right now we're up. Look at this, we're up, and let's say we decide to keep moving down. We move down in a vicious way. Oh man. Sometimes it likes to work, sometimes it doesn't. It's all good. We're not gonna show you on the simulator, because sometimes it likes to work and sometimes it doesn't. Oh my god. Oh, that's that. So I can't show you guys that because I don't know, for some reason on the web page it gets stuck. But again, the ideal point to all this is, if this happens, I can recover a good amount of credit for AT&T. So if AT&T drops, cool. I'm receiving premium credit. I will receive credit. I will receive the credit spread that I'm doing, and my put will receive premium. But if AT&T goes up, right, I will lose $7 times 20, which is $140, and I will be assigned on my shares. And depending how far AT&T goes up, cool, I will lose on the put, but I won't lose entirely. I'll just lose a bit of depending where AT&T goes. Ladies and gentlemen, that's the plays for today. Earlier when the market opened, boy, this thing said account insufficient. Like I didn't have nothing, so I couldn't even really make plays. I had to sell my 50 shares, my 50 runners that I had for Coca-Cola. I had to sell those just so I can get some cash. SoFi is bringing the account all the way down, ladies and gentlemen. So SoFi is going to be our next project here to show you guys how to wiggle our way out of this. And yeah, if you want to follow me on my social medias, go ahead and follow me at TikTok and Instagram at Strictly Financial. Go ahead and leave a comment down below. What's your guys' journey looking like? Have you started investing your first dollar? And I don't give a crap about the people who's been in it. I don't care about the people who wants to talk about, bro's only up a couple dollars. I'm not talking to you. I'm talking to you. I'm talking to the person who has less than a couple dollars and is yet to get started. So ladies and gentlemen, I'll talk to you guys tomorrow.